Hello guys and welcome to my YouTube channel. In today's video I want to show you how you can be catching spikes as sniper entry, with this setup. So how you can always enter the sniper entry to catch spikes. So first of all, there are so many situations that you in the market you will notice and know that there should be spikes coming from that area. Like first of all, based on our strategy, we can see that there was a certain movement here that we could have used to predict spikes, and you can see this happened. All right, so you can see the movement of the market and the breakout and proper retest. This is a valid setup because, as you can see, oh sorry, I took this to the red line. All right, so you can see that the market actually was giving higher highs and higher lows after coming up here impulsively. You see, started giving this particular movement here at this point. Then the next thing it did, it couldn't create a higher high, rather it broke through this and um, broke this, went below this particular low here. You understand? So there's a kind of a change of character right here at this point. So at this point, we wait for the market to reverse to where it has sold previously, which is this particular level, which also looks like a kind of a key level because market sold and also bought around this level. So at this point, so this looks like a kind of a key level. There were buys and sells around this place. So let's see what I'm talking about. You can see market actually bought and sold around this level. There was sell activity and there was a buy activity here. You can also take this as a sell activity in the market. So with this particular candlestick pattern that was formed here at this point, then you can confirm the market was going to sell. And with this bearish candlestick that engulfed this bullish kind of indication candlestick, that's a bearish engulfing pattern, and the market sold massively to the downside. Now, while you may also try to find out where to actually enter the market, because some persons may not know the exact point to enter. At this point, one of the things you need to consider when you see the market giving you this kind of confirmation, because basically you would want to wait to see the bearish candlestick. For some persons, you would want to see, after seeing this particular candlestick pattern here, I would want to enter the market. Personally, I would enter the market without waiting to see a bearish candlestick, because this particular candlestick here signifies reversal, and due to the fact the location where it is formed, so it also confirms it's going to sell. But if you're not too confident in the market, you can decide to wait for a bearish candlestick to form and engulf this particular one. Or yes, like what we have here, this is a bearish engulfing candlestick pattern. So immediately after this, you see the market continued selling to the downside, guys. All right, so you can also enter this particular trade on the 1 minute time frame. That is the main point of this video. So on the 1 minute time frame, you would want to, let's do this. Let's say on the 15 minutes time frame, here is where you would just enter the market. Let's say immediately after the engulfing candlestick pattern. So I'm putting that line on the close of the bearish candlestick bearish candlestick that formed the engulfing candlestick pattern. Let me put it there. Then let me go to the 1 minute time frame and show you where you would have entered the market. I hope I can trace it. Okay, this is it. It's around this place. So you can see now, this is the actual spot. This is it. All right, so you can see what happened. This is the zone we marked on the day, on the 15 minutes time frame. This is the zone we marked on the 15 minutes time frame. You see, on market getting to it, it gave a spike first. But let's not look at the spike first. Let's look at what happened before the market got to the spike, to where it started spiking. You can remember that 1 minute time frame strategy I showed you guys the other time on one of my videos, but two of my videos here on this channel. I think that was in the month of February or so, early March. I can't recall exactly. I showed you how you can always catch spikes at sniper entry, but that was basically on boom 500 and crash 500. So now on crash 1000, what you would do now is you can see this movement here. The market is moving on the 1 minute time frame. We're having higher highs and higher lows, and the market is still moving nicely. So now, if we can just wait for a breakout like what we have here, let me zoom in a bit. Good. If you can just wait for a breakout of the trend line, like market broke out of this trend line, then comes back to retest where it sold previously. At this point, if you enter the market and you leave a little stop loss, you can see only about 3 candles before it started spiking to the downside. You see, so you can just come to the 1 minute time frame, enter the trade at this point, and you allow it to run. Basically, my stop loss, if I want to enter with this entry, I want my stop loss to be above here. If the market gets here and doesn't spike, I will close the trade. That's the way I trade. You understand? Then look for another entry if it later spikes. You see, so if you can enter here and put your stop loss above here, there's a very high chance of catching the spikes. Why are we doing this? It's because we are very sure the market is going to spike based on what we have on the 15 minutes time frame. The market has gotten to where it's supposed to spike. So you want to enter the sniper entry. So this is the best place to enter the market at this time. You enter at this point and you want to see it spike down. Now, spiking down here, there's another problem you will have. The problem of holding the trade, because immediately after this spike, you see the market bought again for a very long, let's say about 10 minutes. It's not 10 minutes. Let me just use this crossover tool and count. I want to show you guys something, because this is one. This is about 12:17. Then let's see what time did it stop. This is about 12:38. That's over 20 minutes candles, I think. Is it? Let me just count them individually. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. About 22 candles. You see, after this first spike, you see the market went bought again for about 20 candlesticks, about 22 candlesticks, and because of fear, you will rush to close the trade, forgetting that the market is actually going to spike massively to the downside, and you must expect buys, even if the market is actually selling. There must be buys in the market. So if you rush and close your trade, then you may not know when to enter the trade again, and you will lose this sales opportunity. So it's good to have confidence when we are entering our trades, because if you see after that long spike and the buys, let's say you enter the market at this, let's say I entered the market at this point where I told you guys I would want to enter. Then if I want to target maybe this place here, guys, with a lot size of 2.0, you can see that's about $41, guys, in profit. $41. Just imagine you have like 2 positions, so you can just use it to make enough money. And mind you, on the 15 minutes time frame, if you go, you know that the market would sell beyond this particular line here. The market must sell below this level here. So just imagine you were able to hold a trade from where we entered down to this level. Let's say you enter the market at this point, like I told you guys. Then our TP is somewhere here. This is over $90, guys, with just one position. So once we see a good trade setup on the 15 minutes time frame, if you are confident of on your setup, guys, do not stress yourself to be rushing to close trade. Allow the trade to run. Yes, allow the trade to run. Let it run. Because the same way you were patient enough to wait for it to get to your take profit, also be patient to get to your entry. Also be patient enough to allow the trade to run to where you're supposed to get a good result, not just one spike and you run away from the market. Except you just want to catch just one spike in the market. But if you want to catch good multiple spikes, you need to be patient, because they don't always come immediately. There are times it happens that you have multiple spikes. Like the first one will drop after like two candlesticks, another one spike will come. But there are times one spike will come, the next one will come after like 10 candlesticks, the next one will come maybe like after 5 candlesticks. So if you are scared of losing, or when you look at your profit and loss tab, you discover your profit is reducing, you're scared of seeing it reduced to a very small amount, then you rush to close the trade. Guys, that is not it. You need to practice how to hold your trades, at least to get some reasonable profit. Not as if I'm not advising you to be greedy, you know. But once you are able to analyze your market on the 15 minutes time frame or on a higher time frame, then you should know where the target should be on a lower time frame. Yes, even on that same higher time frame. Like now, I would want to target this particular. This should be my first take profit where we have this point here. Then my second take profit should be here, this particular level here, and that is massive money, guys. That's massive money. Let me just check. That's $79, and the first one will be around this $41. You see, so it's the same thing, guys. Just take note of these things, and it works. It pays a lot, you know. Then also, if you feel you can't hold these trades, maybe you just need to be scalping one or two candlesticks. Let me still show you the 1 minute time frame strategy that also works. The 1 minute time frame strategy that also works, guys. Just stay put as I show you this. Let me show you this. All right, let me see. Can I find the setup right here? Let me see if I find the setup. One moment, guys. Let me pause this video so I find it immediately. All right, guys. So this time around, this is what we'll do. Let's say you've already marked out your resistance and support, you know, on the 15 minutes time frame or any other higher time frame. I notice that the market is approaching it like what we have here on this screen. You can see we are still on the 1 minute time frame, and on the 15 minutes time frame, there was a line that was put here. So now this is our resistive trend line. This is our resistive trend line, and we expect spikes on getting to this line again. If the market was able to get to this trend line again, it will spike. We will expect massive spikes to the downside. All right, now so the market buying seriously to this particular level, what we need to check out for is we go to a 1 minute time frame first. Let's go to the 1 minute time frame. All right, so this is the 1 minute time frame. Then what do? We try to draw our trend lines. We try to draw our trend lines just like this, like what we have here. Let's draw the trend line, guys. Let's draw the trend lines. Let's draw a trend line. Now, one moment, I think I've done it properly. Okay, now after there is a breakout, guys, watch. What you need to take note of is the breakout. You want to see a breakout. Like now, this is the movement of the market. The market was buying on getting to this trend line here. Market has been buying on getting to this trend line. But unfortunately, the last time the market got to this, let's say it got to this level, this trend line, it couldn't go higher. It came down, meaning there is a break of structure at this point. Sorry, a change of character at this point. You see, each time the market comes down, it goes up higher than the previous high. Like from here, that's what you will notice. But this time around, when the market went up, it couldn't go above this previous high. Instead, it came down and went below the previous lows. Now, you would ask a question, this one did not go above the previous high. Why didn't we enter there? You can't enter because it did not go below the previous low here. Look at the previous low. It didn't go below it. Meaning the market is still bullish on the 1 minute time frame. So, for the fact the market went up and now it couldn't go be above this previous high, but was able to go below this previous low, is a good indication for us to wait for the market to retrace where it had sold previously. You wait for the market to retrace to where it had sold previously, and as you can see, the market got back to this particular level here. What should I use to mark it? Maybe I can use this area where it sold previously, and you can see the massive spikes to the downside. It spiked the first time, spiked the second time, you know. Now it pulled back again and came back to this high and started selling again to the downside. So what you just need to understand is that market, once there is a break of structure, once there is a change of character, once there is a change of character, trying to exercise a little patience, wait for the market to get back to where it sold previously. That is where you will see the spikes starting to come. You understand? Like now, this another a kind of a break of structure here, but the market was still going down. Then it came and broke this particular low again. Now it pulled back to sell from this point. If you can study these things, guys, if you can be patient enough to study these things, you'll be very profitable trading this space. Honestly, I'm telling you, if you can be very patient. When I post all these videos, I'm not asking you to apply all these strategies. If you want to stick to the 1 minute time frame as your entry, then you can be practicing this one, add it as a confluence to your trading strategy. You understand? Or if you want to stick to 15 minutes time frame, then stick to it. The only thing is you need to get knowledge there, because as somebody that is actually progressing in life, you don't need to be so stagnant. You say, because I know this is it. The only thing you can do is just to try to be modifying, adding to what you've known, and not trying to change it completely. Because I discourage traders or anybody that is learning to trade to be changing strategies from one type to another. Like I posted this one, or you saw this strategy, and now you saw another one. Keep seeing, because you keep seeing different strategies on the internet. So the only thing I would advise you to do is to modify your strategies. Pick ideas from whichever video you watch, add it to what you know already. It will make you successful. But if you want to keep dumping the ones you are using already, you will never be profitable, because you keep on jumping from one strategy to another, guys. So that is it. You can see the breakout and the retest. You can see the massive sell to the downside. Breakout and retest works even on the 1 minute time frame, guys. It works. You can always check this thing. It works, guys. It works a whole lot of times. Breakout and retest works. So this video is already too long. I wanted to make a very short video. I did not want to make a very long video today. These things, well, look at all this. After a change of character, the market started selling from here. You see, the market was buying higher highs and higher lows. And here is when we have the change of character here, massively to the downside. Then it went up and started selling massively. Normally, I will put my entry at around this point here. But you see, it still went up a little and came down. Then came and sold properly from where I expected it to sell. It came down, still went up again. So it's a matter of trying to hold the trades and make sure you do your analysis on the 15 minutes time frame. Ensure the way the market is actually coming from is where it is going to sell. You understand? So you will confirm that from the higher time frame. Maybe the candlestick pattern you see on a higher time frame will give you that idea. Then you shouldn't be scared of holding the trades, no matter how it buys. Know that it's going to sell massively to the downside, and you'll make some massive profit, guys. The only way to make profit trading these things is just to develop confidence. You need to develop confidence in yourself, in your analysis, and learn to hold trades. If you cannot use big lot sizes, most times I use a big lot size to just a little move gives me a massive profit and I'm out of the market. But if I don't want to use a big lot size, I use a small lot size, then I will hold the trade for a little while, guys. All right, so that is it. So there's a um like this video, please subscribe to my channel if you've not done that yet. Share this video, and also let me see your thoughts in the comment section. And there's a link in the description of this video that will take you to my Telegram channel, where I post some high probability trades and also post updates about events that I do. So I will advise you to click on that link and join the Telegram channel. And also, if you want to enroll in my one-on-one mentorship, guys, you can, on that channel you'll find my direct contacts. So I will help you to see how to put you through this thing and point you to what you're supposed to see to be successful in trading boom and crash and other pairs that is tradable, guys. A simple strategy that works for all tradable pairs, guys. So contact me as soon as you can, so that I'll put you through. This April already. Today, second of April 2024. The year is going. How much have you made so far? How much did you withdraw last month? How much are you planning to deposit this month? Are you sure you're going to withdraw? Take action now and help yourself, guys. So till my next video, stay blessed. Peace out.